In this video, I'll introduce what a balance sheet is and how this ties into understanding a business's financial health. This concept surfaces on the ARE 5.0 Practice Management exam. A balance sheet is one of three major financial statements. Financial statements are kind of like a report card in school, which provides a big picture assessment of how you're doing. A balance sheet is one kind of report card that tells you how your business is doing financially. It's a snapshot of three things: a business's assets, liabilities, and equity as of a specific date. The goal in a balance sheet is to ensure that what your architecture firm owns is always equal to what your firm owes. What a business owns are called assets, but what it owes are called liabilities. Every business aims to balance their asset accounts versus total liability accounts. You own assets, which equal you owe liabilities. That's a great way to remember it. There are two specific words on a balance sheet that require a definition to understand the terms: current and long-term, which are mentioned with all three major sections of the balance sheet. Those three sections are, again, assets, liabilities, and equity. There are current assets and long-term assets, current liabilities and long-term liabilities. When current is used, it means the current 12-month period. Where long-term is used, it means any time frame beyond the current 12-month period. Here's an example table. Section 1 has assets. Current assets are easily converted to real dollars. They're liquid money. Long-term or fixed assets are not easily converted to real dollars. The current and long-term assets equal your total assets. It's the same with the second section for liabilities. We have current liabilities, or items that must be paid within the current year, and long-term liabilities, items that must be paid beyond the current year. The sum of both equals your total liabilities. And in section 3, there is stockholder equity, which is the value of shares of stock, invested capital by shareholders, and the firm's cumulative retained earnings and losses. This sums up to the total stockholders' equity. So the final equation is assets in section 1 equal liabilities plus stockholder equity in sections 2 and 3. Total assets must always equal total liabilities and stockholder equity. This report is constantly in a state of flux and is usually reported in a single column executive summary, one-page format. That way, firm leaders or even small business owners can understand the snapshot of their business health. These reports get distributed usually on a monthly basis to allow businesses to pivot and make changes based on trends. For an example of a balance sheet, please refer to page 427 of the Architect's Handbook of Professional Practice. Was this video helpful? Comment below and let me know what other financial topics you'd like to see in future videos. Thanks for watching, and see you in the next video.